In this presentation, we will continue on with our example problem related to a not-for-profit organization, a non-profit organization, this time putting together a statement of activities, the statement of activities being similar to an income statement in a for-profit organization. We're going to put together the statement of activities from the trial balance on the left, the statement of activities, what we will construct on the right. When constructing the statement of activities, we will, of course, be concentrating on those accounts that would be below what would be the equity section in a for-profit organization, here below the net assets section. So we got these accounts down below. These would be the revenue and expenses for a for-profit. Similar types of accounts here. We have the contributions and the expenses. Those expenses typically broken out as we have them here by program and by function. By function, including the program and then the general management and general and the fundraising expenses. However, with the statement of activities here, we have the added problem of breaking out the statement of activities between those with restrictions and those without restrictions. So you can see that that's going to be broken out in the trial balance with the wording. The wording has contributions without restrictions, contributions with restrictions. Within the statement of activities, it'll actually be a bit more clear because we'll be able to break this out instead of in one column into multiple columns. So then we can have the name of contributions, for example, as we could see in our first line item, contributions, and then instead of saying contributions without donor restrictions, we put the proper amount into the proper line item, contributions without donor restrictions. Nothing is with donor restrictions, therefore this is the total. So this actually makes it a bit more readable than it would over here in terms of just having the one column type of breakout. That's the format that we will be putting in the statement of activities. Therefore, we will have these three columns, those without donor restrictions, those with donor restrictions, and then the total of the two on the right side. So this is going to be the contributions. Note the contributions is a credit balance down here. When we put it into our statement, we will, of course, not be putting credits into the statement. We will have the positive numbers in our statement of activities. Next, we have the membership dues. So the membership dues are going to be another type of income statement type of account. We're picking up this number. It's a credit because it's a revenue type of account. So once again, membership dues without donor restrictions. We have no donor restrictions. None of it is restricted. Nothing in that column. Then the total then being that $16,785. Next, we have the tuition and fees. Tuition and fees is going to be that $7,084. So the tuition and fees, once again, without donor restrictions in the without donor restriction columns and totaling them up. Next, we have the commission revenue. So that's another revenue type of account, it being a credit balance down here. Commission revenue then going into the without donor restrictions up top for the total without the total over here, including just the amount without donor restrictions. And then we've got the investment income. Investment income will be broken out to those with and without donor restrictions. So we have the investment income here without donor restrictions. That's the $688. Then the investment income with donor restrictions, the $1,303. So we break that out then into our columns. Without donor restrictions, the $688. The amounts with donor restrictions being the $1,303. Summing those two up then in the total column, adding up to $1,991. Then we're going to have the net assets released from restrictions. Now, the net assets released from restrictions are these two kind of funny accounts down here. They can be a little bit confusing to understand the relation between the debits and credits on the trial balance and the increase and decrease on the statement of activities. When you think about the statement of activities, it's pretty straightforward that you can know that this one, the one without donor restrictions, will always be going up. It'll be going up with a positive number because we're representing this as an increase. In other words, these two accounts are always kind of thought of as kind of intercompany type of accounts or interfund type accounts. You can think of them in a similar fashion in that the total of the two will be zero. One will go up, one will go down. The one that's always going to go up is the one without donor restrictions because the point of this is to take something that was previously restricted and then unrestricted and that would increase the one without donor restrictions. The one going down then is going to be the one with donor restrictions. Now, when you compare that to the trial balance, you might say, well, then the negative numbers here, the negative numbers here, and so that could be a little confusing. Note on the trial balance, this is a credit and this is a debit. So on the trial balance, the one without donor restrictions is a credit, and that credit is there because it's increasing what I would think of as kind of like an income statement account. So this negative number is increasing what I would think of as the income statement account. That increase represented by a credit here will be represented by a positive number within the column of without donor restrictions. And this number, the one with restrictions on the trial balance, is a debit balance which doesn't have brackets, because I would think of it as basically decreasing what would be similar to like the net income. It's a decrease type of account, kind of like an expense type of account here, and therefore it has a debit balance. When we represent that decrease in the statement of activities, however, we want to represent it with a negative number. So when we pull it over to the statement of activities with donor restrictions, we will represent it with brackets with a negative number. So that could be a little bit confusing. You might want to mull that over just to get straight the debits and credits and the plus and minus. Main point is this one's always going to go up without donor restrictions. This one's going to be going down. The difference between the two will always be zero because it's just basically kind of like an intercompany type of transfer or interfund type of transfer. Then we have the total revenue and other support. So that would, of course, be summing up these columns. So if we were to sum these up, let's pull up the trusty calculator and do it just for fun. 44,121 plus the 16785 plus the 7084 plus the 2446 plus the 688 plus the 3800 is the 74,924. And then if we were to subtract these two out, then of course that would be the 1303 minus the 3800 for a negative 2497. And then if we were to add them across, we'd get these numbers. And then if we were to add them vertically on these numbers, right, we'd have the 44121 plus the 16785 plus the 7084 plus the 2446 plus the 1991 gives us the 72427. And that, of course, should also sum up horizontally at the bottom here, right? So if we have the 74924 minus the 2497, we should also get to the 72427. Obviously, this would be easier to do and faster to do in Excel. Now we're going to pull out the expenses. So we have the expenses then. We have the exhibition expenses. Notice these expenses are by function, what they're used for, rather than by nature. We're not breaking them out by telephone and whatnot, and utilities and whatnot. We then allocated them by function. This will make it easier for the readers of the financial statements to read. And you'll recall that if you're looking at the board of directors on a not-for-profit organization, they may not be completely familiar with financial statements. You don't want the longest financial statements. You don't want it to be too tedious. If we break it out by function in the statement of activities, that makes it a lot more easy to read. So we break it out by function here, and then oftentimes have some other schedule that will be located in some other location, which will give us the added information breaking it out by function and nature, so that we can also see the actual expense categorization. But notice without all the expenses here and just the functions, what these things are used for, what the expenses were applied to, will be a lot shorter, a lot easier to read. So we're picking up that 22,366 without donor restrictions. All these will be without donor restrictions. Then we have the community education without donor restrictions. And then we have the management and general. That's without donor restrictions. That's picking up this number and this number. And then we finally have this number are being picked up here. And so there we have those. If we add those up, then I won't add in the calculator, but if you sum these up, they'll add up here. And then, of course, they'll add up across as well because there are nothing in the with donor restrictions column. So in essence, we found a home for everything now down here in our basically kind of income statement or temporary accounts from the trial balance. Next, we have the decrease in net assets. And this is going to be similar to our net income type of number. This is kind of like what you would think of as the bottom line type of number for the statement of activities. It's not going to be the last line item, but it's kind of like the bottom line number for the statement of activities, what has happened in summary over that time period, similar to the net income. Now, you might ask, why would it be called the decrease in net assets? Just note that that's similar to a for-profit organization, because if you think about the net assets, that would be like the equity section. Assets minus liabilities is the equity section. the made change between the equity section, as we could see when we did the closing process, is what we would consider basically net income. We're going to close net income out to the net assets. That would be the same as if we closed out net income to the capital account in a sole proprietorship or to retained earnings. Now, one reason we don't really call it that a change in retained earnings or a change in the capital account for a corporation or a sole proprietorship, and rather call it net income, is because that's often not the only change. There could be other things that have been included in the change, such as investments, dividends, draws. Those are things that are not included in the not-for-profit organization. So therefore, the only change then in the net assets generally will be what would be equivalent to net income. So we can then call this basically the decrease or increase. This happens to be a decrease in the net assets. So that's why we're going to basically call it the decrease in the net. For some reason, they just didn't want to call it net income because that might indicate an income objective. That's my assumption as why that would be. And therefore, the decrease in net assets, that's what it's called. So that, of course, will be the total revenue and other support minus the expenses. So we're subtracting those items out. So we're going to take the 74924 minus 75497. That's the 573. This one just pulls down. Then if we were to take this on the ending balance, the 72427 minus the 75497, we get the 3070. If we were then to add them across this way, we got the 573 plus the 2497. That also adds up this way as well. Now, the next thing we want to do is actually tie this out to the final section of the balance sheet, the section of net assets. So now we're going to have the beginning net assets. The beginning net assets being these numbers. These are going to be the beginning net assets. Note that they're the beginning net assets even though they're on the adjusted trial balance, because like retained earnings, like the capital account in a corporation or sole proprietorship, nothing really gets posted to those accounts typically, generally, over the entire time period. So even though they're on the basically ending trial balance, these are the beginning balances because nothing got posted to them. The ending balance will be them after we close out the temporary accounts. These are the temporary accounts in the statement of cash flows. Therefore, we could take these beginning numbers and tie them out to the ending numbers just on this statement. So that's what we will do here. We're just going to take these numbers, the 9131, that's without this restrictions. Then we have the 14445, that's going to be the, and then we'll add, actually we add these two together because these two are going to be both with restrictions. So therefore, the 14445 plus the 5887 is going to be this, is going to be equal to the 20,332. And then if we add those across, then we're going to say that that plus the 9131 is going to be equal to the 29,463. And then finally, that'll give us the ending net assets, which will be the change, the decrease, plus the beginning. So, for example, it would be the negative 573 plus the 9131. That would give us the 855.8, and so on and so forth. These ending numbers then, when you look at the statement of activities, you'll note this isn't kind of what I would think of as the bottom line number, because I would think of as the bottom line number the decrease in net assets being similar to the bottom line number. And then these are going to basically tie it into what would be similar to the balance sheet type of account. If we then compared that out to the balance sheet, you'll say, here's the statement of financial position, in essence, the balance sheet. You can see that these numbers here are going to be tying out to the bottom line numbers. So these are tying out to basically the bottom line numbers in the balance sheet, although you have to add these two up again. So we've got the 11,948 plus the 5,887 for the 17,835. That's going to be the 17,835, and then the 26,393 will be here.